You asked for it, you got it. Top 5 cloud stocks. Now, if you're not familiar with my background, I worked in software and software as a service for about 12 years. And I resigned from my software gig. I made $150K base salary plus commissions, and I quit that job to do this. In this video today, I'm gonna give you my top 5 stocks, and I'm gonna rank them by my highest conviction. Now, there are a lot of SaaS names out there, I admit that. And you're gonna say, well, what about this one? And what about this one? Stay tuned for the whole video, and I'm gonna show you how you can get more information on additional cloud stock picks. This video right now, we're gonna focus on my top 5. Let's get right into it. So the 5th one on the list, this is ranked from 5 to 1. So 1 being my highest conviction stock. Cloudflare is my 5th highest. Now, Cloudflare, in a nutshell, high level, it's a global network designed to make everything you connect to the internet secure, private, fast, and reliable. Secure websites, APIs, and internet applications. Protect corporate networks, employees, and devices. Write and deploy code that runs on the network edge. Think of cloud edge computing here, guys. Now listen to this, guys. 50% compound annual growth rate. 50%. With a $1 billion annualized run rate. These are big numbers. So what I'm gonna do for each stock pick is I'm gonna go through the 4 primary metrics that we use when we're evaluating SaaS companies, software as a service, okay? So this is a unique space, and you use these metrics. This is what venture capitalists and institutional investors generally use when they're evaluating these type of companies. Now you can use other metrics like price to sales, you can use whatever you like. These are the 4 primary metrics that are used. The first one, EV/NTM revenue. So this is a 20.5x. It's pretty expensive. It's not the most expensive, but for the growth, it's pretty expensive. Rule of 40, 44%. Now you want the rule of 40 score to be 40 or higher. The higher the score, the better. So this is a very important metric, and you want this to be over 100%. The higher the number, the better. Essentially what it's telling you is you're keeping your customer and you're growing that customer base. So they're spending more money with you. You're expanding to different modules. You're expanding your footprint within these customers. You want to see that kind of growth when you think of these software companies. Cloudflare is 126%. That's a strong number. Now, free cash flow is going to be really important, especially in this type of environment. You want this to be positive free cash flow. You don't want companies burning cash. The reason Cloudflare is ranked 5th as well, it has a -10 free cash flow. It's the only stock on this list that doesn't have positive free cash flow. Number 4, Zscaler, ticker ZS. Think Zero Trust Exchange. Their Zero Trust Exchange, think of it as an integrated platform of services that acts as an intelligent switchboard to secure user to app to app, and machine to machine communications. You'll hear the terminology web gateway security. This is another cybersecurity stock. So a Zscaler, the EV/NTM revenue, 16.7x. So still pretty expensive, but not nearly as expensive as we saw in Cloudflare, and it's gonna be one of the less expensive ones on this top 5 list. Rule of 40, very solid, 83%, about double of what Cloudflare is. Net dollar retention, very strong, 125%. And free cash flow, this time we're gonna be positive 21%. Now don't go watch this video now, but when this video is over, I have a deep dive on Zscaler, you can check it out. Number 3 on the list is gonna be CrowdStrike. Think endpoint security, this is best of breed. Now if you're subscribed to Fired Up Wealth, this channel, you know that we've covered CrowdStrike many times. We even did a demo of the software on the channel. So if these kind of stocks interest you, definitely subscribe to the channel. Click that bell to get notifications. For the sake of this video from a high level, this is endpoint security, a lightweight agent. Essentially what it's gonna do is help stop breaches. Next, I'm gonna show you a couple quick slides on CrowdStrike just to give you some more background. The CrowdStrike numbers are really impressive, guys. They've got, so annual recurring revenue, ARR, that's another metric we look at with SaaS. $1.92 billion, that's very impressive. 61% year-over-year growth in the ARR. You got 64% subscription revenue year-over-year growth. That's massive for a company that's, you know, it's a mid-sized company, mid-cap, but it's still growing very nicely. Free cash flow rule of 40 is a 93% here. Subscription customers with 4+ modules, 71%. They have 17,945 subscription customers. So with all these stocks, you could spend hours on each one, but this is important to note. Cloud scale AI, artificial intelligence. Our AI technology gets smarter as it consumes more data. So the more people that use CrowdStrike, the more data it consumes, the smarter the AI gets, at least in theory. Customer base, they have 65 of the Fortune 100, 254 of the Fortune 500, and 15 of the top 20 US banks. So when you think of net-based retention, you're trying to expand the customer footprint. And this is talking about their large and expanding TAM. So CrowdStrike modules, they continue to add more modules. Okay, so you look at this, they add more modules, it continues to allow them to grow. Their total addressable market here, 2024, They show 71.1. This is in billions. This is showing you here the IPO in 2019. I've covered this stock since 2019. I've owned shares since 2019. They said their total addressable market was $25 billion back in 2019, and their potential here for 2025, including planned offerings, is $126 billion. There's certainly a lot of competition when you think of endpoint security. You think of SentinelOne, that's a good stock as well, and that's gonna be on my top 20. You'll see more about that here later in the video. But CrowdStrike really is best of breed. Even Microsoft plays in this endpoint security. There's a ton of different providers, but they are the best. They are the cream of the crop. They're best of breed. Here's their subscription ARR, and you can really see how it's accelerated. 61% ARR year-over-year growth. These are impressive numbers. This is ramping up, and it's continuing to go upward, and this is what you want to see in a hyper-growth stock. Strong revenue growth. You can see subscription as well as professional services. They do some professional services. This here is going to show you customer retention and expansion, going back to that dollar-based retention rates that we talk about. And you can see that we had a dip and it's starting to come back up. But it was as high as 147% here a couple years ago, and now it's kind of come back down. But 125%, 124%, still very solid. I think this one's important too. So 4 or more modules, 71% of their customers, 5 or more, 59%. It shows you how much growth is available here. There's only 19% of their customers that have 7 or more modules, so they can definitely bake that out more. You can see their total gross margins are kind of flattening out around 79%, but they have improved quite a bit over the last couple of years, from 57 to 69, 75. Now they're kind of flatlining at 79%. Really solid margins. You like to see it 80% or above, but it's kind of right there. So when you think of free cash flow, that's really strong. 51% year-over-year growth. That's annual free cash flow. Here's their operating model. So they want 77 to 82% gross margin, so they think they can improve that maybe a little bit. Free cash flow margin 30% plus. Back to the valuation metrics, EV/NTM revenue on CrowdStrike 18.1x. Rule of 40, very strong, 92%. Net dollar retention 120%. Free cash flow is going to be 31%. That's the highest on this list. Number 2 is going to be DataDog. Now, if you watch the video I did last year, I did a top 10 cloud stocks video, and you'll notice that the order of these stocks have moved around a little bit. That's just because of conviction levels when you think of earnings calls, and this is something that when you own a stock, you're not just going to buy the stock and forget it. You always see like 10 stocks to buy now and hold forever. In my opinion, that's not correct. You're going to buy a stock, you're going to continue to monitor it to make sure that management is on point and doing what they're supposed to do. DataDog has moved up the ranks because they have proven themselves to us. Let's take a look at a couple of slides quick. DataDog, August 2022. Now, I just did a deep dive on this one on the channel, so check that one out at the end of this video. Finish watching this video first, then you're going to want to explore the different playlists at the end and the different cards and videos available. Now, what I really want to show you here is DataDog solves complexity. And it have all these different tools. You have all these different things that an organization has to deal with. You think of IT organization. It tries to solve the complexity. It tries to break down the silos. Okay, so unified platform, breaking down the silos, deployed everywhere, used by everyone. They have a history of innovation. So you can see all the way back 2010, and they've really grown their platform. They're getting more now into cybersecurity with their security platform, started doing that in 2020. A lot of people think of DataDog and they think of just like APM, or they think of infrastructure monitoring, but they're really expanding outside of that. And that's gonna help with their total addressable market and their growth. I mean, just look at this in the last 12 years. From 2010 to 2022, how much they've added. And you can see recently, application security monitoring, watchdog log anomaly detection, watchdog root cause analysis, audit logs, service catalogs, on and on and on. I do think that the cybersecurity part, when you think of the cyber portion of their business, I think there's a lot of opportunity and total addressable market for that. So observability, these guys again are gonna be best of breed. There's other companies that do it. These guys are best of breed, and nobody really does as much as they do when you think of the breadth and you think of the scale that DataDog can cover. 2025, they're thinking $53 billion for the total addressable market. You can see the growth. $38 billion in 2021 to $53 billion in 2025. Here's that famous Magic Quadrant, okay? So they're the leader 2022, and this is gonna be for Magic Quadrant for application performance monitoring and observability. You can see Dynatrace is up here right next to them. So when you look at ability to execute, DataDog is the highest. When you look at completeness of vision, Dynatrace actually has them by an edge. But I think that DataDog, because they don't do just this one topic, so they're best of breed in this one topic, or tied essentially with Dynatrace, but they do so much more than this. This is the money slide right here, okay? So look at this year-over-year growth, 79%, 21,000 customers, 100K plus ARR customers. They have 2,420. That's a good thing. You don't want to see like just a couple of big customers that have the majority of the revenue. They're very diversified. 26% free cash flow margin according to this slide, 130% plus on that dollar-based net retention rate. That's for 20 consecutive quarters. That's very impressive. Now, on top of free cash flow, DataDog has $1.7 billion in cash and cash equivalents. And you can see, just like with CrowdStrike, that platform adoption. So 79% of their customers are using 2+ products, only 14% are using 6+. So there's lots of room to grow. So large and growing TAM, total addressable market, rapid growth at scale, strong business model, 130% plus in that dollar-based net retention rate for 20 quarters. That's a mind-boggling stat to me, guys. And here's their revenue growth. You think of quarterly revenue, okay? 74% compound annual growth rate from 2017 to guided FY22. And you can see the numbers just ramping up higher and higher and higher. These guys have moved up into that second spot on this list, and it's well-deserved. Again, I could spend hours talking about each of these stocks, but I want to show one last slide. Strong customer growth. Now look at the customer growth from 2017 to 2020, 2021. Look at this, 5,403 all the way up to 21,200. Very impressive growth. These metrics are really impressive. So EV/NTM revenue, 18.x. Really expensive, but not the most expensive on the list. You look at the numbers of this and then compare it to Cloudflare, and you might want to buy DataDog over Cloudflare. Now, all these stocks are expensive. I'm not saying that you should go run out and buy these stocks today or anything like that. I'm giving you my top 5 highest conviction cloud stocks that I've bought much lower levels than here. Next is Rule of 40, 102%, rock solid number. Net dollar retention, 130%. Free cash flow, 28%. All across the board, DataDog has the strongest numbers of this top 5. Now, we've also done a couple of deep dives on DataDog. Don't go watch them now, but when this video is over, we've got a DataDog deep dive here on YouTube, and then we have an exclusive one on Patreon, an hour video where I actually interview an employee of DataDog, and you have to see that one if you're a bull on this stock. And you say, wait a minute, we just saw some amazing numbers from DataDog. Why wouldn't that just be number 1? Well, it could be. The difference is, I think the total addressable market for this next company could be larger, especially when you think of the advertising segment they're trying to get more into. They've got their tentacles going in a lot of different areas. I think this stock is mostly misunderstood by retail. I've done my best. I've brought this to the channel before the IPO. I have an entire playlist of Snowflake on the channel. So again, subscribe, take a look at all these other videos. We've got tons of videos on cloud SaaS stocks. Number 1 is going to be Snowflake. And this is going to be not really a SaaS company, it's database as a service. Okay, so this is a consumption-based model. It is a very unique stock. It does not compare apples to apples to the other 4 stocks on this list, so I want you to hear that. Let's take a look at Snowflake at a slide deck. I'll give you a high-level overview of what this company is all about. So a couple of these stocks do have earnings coming up, so you have to note that. Snowflake is going to have earnings here at the end of August. So these guys are a bit unique compared to the other ones on the list. This is going to be data cloud, but it's consumption-based. Database is a service, okay? You think of data warehousing, you hear the term data lakes. I've got a lot of information on the channel about Snowflake. There's an entire playlist. I made a playlist that's just Snowflake. So if you want to go check that out and dive deeper, wait till this video is over and go do that. So when you think of the data cloud, single engine, all workloads, all data, all formats, all sources, cross cloud, very global. You can set this up where everybody in your organization can be a user of the product. The thing about data is it's very powerful. The problem with data is it's very siloed. There's a lot of disparate systems across organizations where they can't communicate, where that information doesn't communicate. And there's really no way to compile it for many organizations to make use of that data. Snowflake's going to help you do that. Now, one thing to note that I have not heard a whole lot of people talk about is Snowflake is trying to also expand into cybersecurity, just like DataDog. Now, if Snowflake wasn't the most confusing stock on the planet before this, it probably will be now. And if it wasn't the most confusing, it's definitely on the list. I just don't think a lot of people understand Snowflake. And the thing about Snowflake is there's a lot of different areas of Snowflake too. So you can go down a rabbit hole with the company. You can spend hundreds and hundreds and hundreds of hours. And I've done so. I've spent hundreds of hours. I've actually used the platform, used the tool, but you still learn about Snowflake every day. And now they're going to add cybersecurity. Okay, so protect your enterprise with near unlimited visibility, powerful analytics, and an ecosystem of cybersecurity partners. Near unlimited visibility, eliminate silos and break free from expensive limits on ingestion and retention, spin up compute resources on demand, and pay only for what you use. Again, consumption-based model. And then powerful analytics and growing ecosystem of connected apps. Snowflake also recently announced this Unistore, a modern approach to working with transactional and analytical data together in a single platform. Check this out, data cloud growth. This is April 2020 on the left-hand side, April 2022 on your right-hand side. So just in 2 years, look at the cloud growth. Snowflake innovation, 2014, they wanted to disrupt analytics. 2018, disrupt collaboration. Today, disrupt app development. This is showing that database management systems that we're continuing to spend more on these. So when you look at 2016 to 2026, it's growing from 11 to 17%. So this is gonna talk about their TAM, significant market opportunity. This blue color, the biggest blue on the circle here on this wheel, $173 billion. That's going to be your data warehouse, your data lake, your Unistore. You can see $14 billion in collaboration and data engineering. You got $51 billion for data science, machine learning, and applications. And then that new one is cybersecurity, about $10 billion of total addressable market. Developing the data cloud opportunity, it shows $248 billion cloud data platform. The reason that Snowflake is number one is I believe it has the most total addressable market. It's also why it's really expensive, because other people believe the same thing and they're paying a premium for speculation of what could be future growth. There's no guarantees, there's no slam dunks. Frank Slootman is one of those CEOs. Everything he's touched in the past has turned to gold. He made me a lot of money at ServiceNow, and he's done well even before then. When you think of Scarpelli, his CFO, he's been with him for 3 different companies now. I mean, those two are basically the Batman and Robin when you think of Silicon Valley, and I'm not even kidding. Now, they actually moved their headquarters to Bozeman, Montana, which is, I think, kind of funny. But anyway, so you look at this profile of customers over $1 million in product revenue. You can see, enterprise, corporate, data sharing, behavior size. There's a lot going on with this company, a lot to be excited about. It's an expensive stock. I think it's one of those 5 to 10 year type holdings, and it's probably going to be in your spec bucket unless you maybe have done as much homework on this as I have. I mean, land and expand, this is no joke. I mean, 177% they're showing here. Net revenue retention, these numbers are just mind-boggling. They hurt my mind to even think about them. It's telling you that people get in and it's very sticky and they use it and they spend more and more money. Now, I've said this before, but what separates the good and the great companies when you think of software companies, generally a strong sales team. Of course, you have to have a great product, you have to have great leadership, but you have to have a strong sales team to make that engine really run. And they're investing in sales headcount, not only domestically here in the United States, but also internationally. And you can see that they're really putting a lot of money and effort into really developing their sales headcount out. This last one's really important. So they want to maintain dilution. Stock-based compensation is a big topic when you think of these SaaS names. Some are worse than others. Snowflake hasn't been great in that area, and they want to try to harness that in the best they can. Now, I understand it. You think of Scarpelli and Slootman, it's probably their last rodeo, and they wanted to get paid. So they're developing the way that they're paid, the stock-based compensation, to motivate themselves, but also to motivate their sales teams, their executives, and so on. So it's a slippery slope, because I've worked in the industry and I understand how that stock-based compensation can really help motivate you. But as a shareholder, I understand that you don't like the dilution. They're trying their best to maintain that dilution the best they can for us. So their long-term operating model is very impressive. When you look at this non-GAAP adjusted free cash flow, so FY21, it's 12% negative to 12% positive. They're trying to get this up all the way to 25% positive FY29. So this is a long-term growth story, guys. This is something you're going to hold 2030 and beyond. And there's certainly risks, there's speculation built into the stock price about the story that it will unfold. And it could be disrupted. There's always risks in this stock. Understand that. All right, Snowflake metrics. These are also very impressive, but it's very expensive. The most expensive stock on the list, basically the most expensive stock that I track. The most expensive stock on the planet, in the universe. 23 EV/NTM revenue. Rule of 40 though, 103%, very solid number. Net dollar retention, now this is also a little bit different metric than if you compare it to a true SaaS, but for the sake of using the comparison, it's 174%. Remember, this is consumption-based. Free cash flow, 18%. I think that Snowflake has the biggest total addressable market. It does carry risk and some speculation. Do not leave yet. You're gonna wanna hear this next part. I've got a list of my top 20 cloud SaaS stocks that you can go watch right now. It's a Patreon exclusive. Any tier will get you in. top 20 cloud SaaS stocks ranked by my conviction, 1 through 20. It's a spreadsheet that's going to show you all the different metrics. It's going to show you which ones are maybe on sale right now that might be buys and which ones are a little bit too expensive. We're going to look at what I actually own and how much. I'm going to show you what I own of each of these stocks. I'm also going to break down the top 10 for highest risk reward. So if you're young and aggressive, I'll give you the 10 that are most likely to give you a higher risk reward. So check out Patreon, guys. It's patreon.com/firedupwealth. Any tier will get you in. I appreciate your time and attention. Hope you have a great rest of your day. Take care.